Holy smokes, we will go over everything that happened today in markets, Nvidia's massive outperformance that led to a sell-off in basically the rest of the markets, what Tom Lee, Dan Ives, and others are saying about a new tech AI revolution that is coming, and most importantly, what is coming for Tesla stock, as you're probably heavily invested in the stock if you're watching this video. So first, let's start off with the obvious what happened today. Nvidia was up 10% for a majority of the day today. It did start to fall towards the end of the trading day, but really the markets started off bad today. As Nvidia fell, that just made markets get even worse towards the end of the trading day. All of your major indexes had pretty bad days today. This is what Dan Ives said following Nvidia's blowout quarter.
You've been pounding the table on it. You've been right. $1,000 a share, guiding $1 billion over forecast. I'm trying to find something to ask you where there might be a hole in the story, but I just don't know.
The party's just getting started. I mean, I believe this is really this AI revolution that's playing out. And it's not just for the godfather of AI, Jensen, Nvidia. You look across tech, we're going to be talking about $3-4 trillion types of valuations in tech. There is no slowing down. Brian, I think even the bulls, this is a drop to mic quarter in terms of this. And look, you have bears out there, of course, like Ross Gerber and others on valuation. But I think this is just starting. It's a 1995 moment, not a 1990.
I guess if I had to poke, you've been pounding the table on it. You've been right. $1,000 a share, guiding $1 billion over.
So Dan Ives is clearly bullish on Nvidia, bullish on other stocks like Tesla. He tends to cover really your tech sector, so not a big shocker. But I did find it interesting. He was talking about $3-4 trillion plus valuations for some of these tech names, and that could be a long runway of growth from here. So what really happened today was Nvidia outperformed, and when you have Nvidia outperform and give you a blowout quarter and go up 10% in a single day, fund managers, they almost need to chase that or they're going to lose clients, especially if they are not allocated enough to Nvidia or to the semiconductor sector. So what you had today was institutional investors that sold other positions in other stocks, Tesla, PayPal, Fubo, SoFi, CRISPR, Dollar General, just some of these stocks that I own that were selling off big today, and putting that money into Nvidia, because whether or not they want to, you gotta own Nvidia or your clients are not gonna be happy with you. And you might not keep your job if Nvidia keeps rallying and you have no exposure to it. I think the other aspect to this is the S&P went from about 5,000 on the SPX all the way up to about 5,300 or 530 on the SPY right before Nvidia reported earnings, and there was a lot of this good news already baked into the stock. Now Nvidia gave us a little bit of a wild card because they threw in the stock split news, and I think that's why Nvidia is really up today. But now that Nvidia is out and over with, there is a little bit of the sense of what's the next catalyst. Well, we don't have a catalyst for a while, at least one that definitively should be a bullish catalyst like Nvidia earnings. It's a literal no-brainer. Nvidia is going to come out, beat and raise guidance. Everyone expected that heading into the quarter. Now, if they hadn't beat, well, that would have been bad, but they clearly did. So what do you get now? You get a little bit of reset from investors saying, hey, maybe now we can pull some off the table. You also have a pretty interesting technical breakdown on the S&P and the NASDAQ, and we'll talk about that a little bit more later on into this video. Now, Tom Lee just said yesterday that he believes a new tech cycle is currently underway, and this could last into the 2040s. Tom Lee also said that he expects if Nvidia beats on earnings, you could actually see a broadening out of our markets, and I do still think that is possible, especially when you get Nvidia, this starts to fall again, because if Nvidia starts to fall over the next couple of days, which it typically does after a gap up after earnings, have about a 2 to 3 week period where it kind of trades lower, usually by about 8 to 10%, then that could allow fund managers to say, hey, Nvidia's moment is now past. We're probably going to get a little bit of a setback here. We don't need to, continue to reallocate to Nvidia over and over again. Maybe we can go out and buy other stocks. So I still think a broadening out of our markets. I still think Tom Lee can be correct in that sense. But judging off of one day, it's not going to do you any good. Next week could be the broadening out of markets, because today is far from that. In fact, 5% of stocks out there on our markets or in our markets today are falling under their 50-day moving average. You have over 90% of stocks that are declining. So even when the markets were green in the beginning of the trading day, you still had 80+% of stocks that were falling on the day. The farthest thing from a broadening out of our markets, a contraction of our markets was actually happening throughout the day today. CNN's Fear and Greed Index today is falling, as you would expect, to 56, which is still barely in greed territory. Yesterday, you were at 58, which was a little bit more greedy. And 1 week ago, you were at 63, which was well into greed territory. Your most recent AI investor sentiment survey that came out just yesterday shows a lot of people were bullish as well just yesterday. 47.0% of investors surveyed were bullish, 26.6% were neutral, and 26.3% were bearish. This is very interesting. So the bulls went up almost 7%. Bears went up 3%. That's pretty interesting and pretty rare to see bears increase and bulls increase. Pretty interesting. Neutral investors did drop by about 9% though. So that's where it came from. People are a little bit less neutral, a little bit more bearish, and a lot more bullish. Now, following today's market decline, you're probably going to get more bears that start to come out and get bearish again. 10-year treasury yields today are also up about 4 basis points, up to 4.47%. So that is definitely putting some downside pressure on stocks as well. Today, you did have some data that came out. 8:30 in the morning this morning, Eastern Standard Time, you had Chicago Fed National Activity Index that came in at negative 0.23. The estimate was actually positive 0.16. So bad for Chicago area activity. Initial jobless claims came in at 215,000, below the estimate for 225,000. So that was actually good news for the labor market. And maybe bad news for equities, because a lot of people want to see the labor market get worse. But overall, that's good news. If the labor market stays strong, that's good news no matter what. But this was the data that really did it today. S&P Global Composite PMI came in at 54.4. The estimate was 51.4. S&P Global Manufacturing PMI came in at 50.9. The estimate was 50.1. And S&P Global Services PMI came in at 54.8. The estimate was 51.4. So here's the deal. The markets today, seeing these numbers, this data that came in, all of them higher than expected, and said, that's bad news for inflation. That's bad news for the Fed. No, it's not. It's just showing the economy is strong. That doesn't necessarily mean that inflation was strong during the month of May. So, yes, this is just one data point. And maybe it does mean inflation was strong. I don't buy that. One of the main reasons for that is because inflation tends to track the price of oil. And oil even today is down about 1%. You hit a high of $83.41 per barrel. This was on April 12th. And I mean, now you're at $74 a barrel, right? So you're actually seeing oil decline. And the way that CPI is calculated, it's calculated 3 points a month. So beginning, middle, and the end. If you see oil fall from the start of a month to the end of the month, throughout those readings, that's going to have a positive impact on inflation or bringing inflation down. Now, rents are the biggest contributor to inflation right now. And none of this data today suggested that rent inflation actually rose. It just shows the economy is a little bit stronger than we thought it was. Now, we also had Kansas Fed Composite Index that came in at -2. Estimates were -4. And Kansas Fed Manufacturing Index that came in at -1. The estimate was -8. So today's data just showed the economy is stronger than people thought. That's actually good news for stocks. Now, can that have a correlation to inflation? Of course, but when you're looking at these specific components of inflation that are around and prevalent, and that's really rents and insurance. Without those, we would be at right about 2% inflation. Those components don't really have too much to do with how strong the economy is. Of course, rents do, but this data isn't telling us that rents rose, right? This data isn't telling us that auto insurance should rise. In fact, there's actually news that came out today that maybe rents should fall soon. And here's this article from CNBC. It says auto insurance rates are jumping the most since the 1970s, but there could be relief soon. Motor vehicle insurance costs were up 22.6% from a year ago, the largest annual increase since 1979, according to Bank of America. Recent trends probably do not mean that your premium will fall, but we think the rates of increase should slow, according to Bank of America's economist Stephen Jangyu. The turbocharged increases in motor vehicle insurance premiums are a response to underwriting losses in the industry. Insurers saw losses. Bank of America economist Stephen Jangyu wrote in a note. I have no idea if I'm saying his last name right, so I'm probably butchering it. However, he added, there are signs that many insurers are getting back to profitability. Tomorrow morning, we will be getting some pretty big data as well. Coming out at 8:30 in the morning Eastern Standard Time, you will get durable goods orders month over month. You are expecting a negative 0.8% number. Last month was positive 2.6%. So expectations are that durable goods orders, which is orders of most things, will actually decline on a month over month basis, showing the economy is probably not that strong. Now, the data today said the opposite. Expectations were that the economy was going to be, bad or slowing down, and it came in pretty good. So I think you're probably going to come in high here tomorrow. Maybe not as high as last month's 2.6% number, but maybe a positive number, maybe a 0.2, 0.3% number. And that could be seen as maybe a negative for markets because, again, markets are just saying, hey, if the economy's strong, inflation's high, which that's not necessarily the conclusion that you should draw, but that's kind of what the markets are doing right now. Now, for Tesla stock specifically today, Ortex says the institutional option activity was on the low side, 0% positive order value, 2 orders totaling $1.69 million. I do think this is not that accurate, though, over the past maybe couple of days, because you're actually seeing some pretty large bullish institutional trades. Like, for an example, take a look at this trade. You do have a June 2026 $490 call for $233,000. A $490 call. That's all-time highs plus some by 2026, which is out of the realm of possibilities for the average hedge fund or institution. Nobody's expecting Tesla could be able to do that. And although I think Tesla can do that, that's saying something if you see other hedge funds, institutions, or money managers making similar trades. Now, if you take a look at the volume today, it's actually getting better. So the volume is going to include retail, hedge funds, institutions, everyone, right? Volume today is about 59% calls, 41% puts. So, general consensus is, hey, could be a good time for Tesla stock coming over the next couple of weeks. But Tesla did not have a great day today. Tesla stock was down about 3.5%, and it looks like you're probably going to fall back to that 50-day moving average around 171. Tesla stock is around 173 right now. So you get back to 171, your 50-day moving average. If that serves as support, great. You probably are about to go through a volatile period of time, especially as we head into June for Tesla. June 13th is going to be a big day. July 31st, I believe, is going to be a big day once you do get the first cut from the Fed, which I think that will be the first cut from the Fed, that June 31st Fed meeting. You also have Tesla earnings that'll be somewhere around June 20th or so. And then you have the robotaxi event on August 8th. The next really 3 months are going to be volatile for Tesla. But I do think bullish and quite bullish for Tesla stock investors. But you definitely do want to see a hold of that 50-day moving average. If not, you want to see a hold of that 160 level. I think Tesla stock is pretty well conditioned for bad news. I think a lot of bad news is already priced into the stock. So I think it would take something really bad happening to get Tesla to fall back under 160 again. So I do think in that sense, a lot of the downside has already been realized. And I think there's a lot more upside here than downside, even in the near term. I also think Tesla's earnings coming around, again, June 20th, well, could be a positive surprise because estimates are just so low. And as short sellers continue to short Tesla stock like there's no tomorrow, about 4% short interest of free float. That is a multi-year high for Tesla. $19.5 billion currently in short positions with 107.57 million shares currently sold short. It's only a matter of time before you do get a short squeeze for Tesla. And I think this next short squeeze with Tesla, if it happens based on the right news and the right catalyst, you may never go back under $200 per share. Think about how well Tesla has done in this market environment with the highest rates in Tesla's business history, with the highest inflation in Tesla's business history, drama on drama on drama on drama, whether it's with Elon or Tesla getting sued, this or that. I mean, just imagine what happens for Tesla when things get better. And I know getting better for Tesla is, arbitrary, right? When does it get better? Will it get better? I know people are going to have their own opinions, but eventually it will get better. And just imagine what Tesla's business will do. Imagine the numbers that Tesla will put up even in 2025 as you start to get rate cuts. Tesla can actually think about raising prices again. Demand picks up, margins are boom, better than they ever have been before. That's the kind of scenario we could be looking at towards the second half of 2025. If not, I think pretty conservatively, 2026. You could be looking at record margins, by far record deliveries, 3 million plus deliveries a year by 2026. I mean, what would there not be to love about Tesla stock today? 50+% lower than its all-time highs. But again, markets are forward-looking. So really over the next couple of months, if the outlook starts to get better for Tesla and we can realistically sit here and say things are going to get better for Tesla, not worse, that's typically when a stock bottoms and starts to make most of the recovery. So here, even in the next couple of months, things are going to get very exciting for Tesla stock. Yes, and I know some people poke holes in, $220 per share, but I think Tesla stock is going there within the next month or two. I think by August 6th, I would be very surprised if Tesla was not in the mid 200s, 220 to 250 or so. That would be my, August 8th, price target, if you will, and maybe give it a couple weeks after that. Call it by September, your mid 200s. Now, typically what happens during an election year is you tend to get a sell-off towards the election itself because there's a lot of uncertainties, different policies, and what different governments want to do, right? There's different implications every single time, but there does tend to be a sell-off around the election itself, 2 weeks before the election. But then you do tend to see a pretty aggressive rally after the election, no matter who wins, because the uncertainty is over with. And I think that could also be a very bullish period in time for Tesla stock. And we really don't have too many market-wide catalysts as Nvidia earnings are now over with. to really look forward to, right? It's going to be the first week in June before we get any, large data coming out. Earnings are over with. Tomorrow you have durable goods orders, and that is an important data point. But besides that, it's smooth sailing here for the next 2 weeks or so. Now, again, think to what Nvidia normally does after or before earnings. It tends to sell off. Now, including today's rally, Nvidia has rallied over $250 per share in the last month. Yes, sure, is some of that maybe warranted? Sure, you can make the argument for that. But after a rally like that, you tend to see some consolidation and some give back. With the markets following Nvidia so closely, it wouldn't surprise me over the next 2 weeks or so to get a little bit of a sell-off. But again, if Nvidia sells off by itself, that's probably the catalyst for an outperformance, because fund managers, they don't need to keep allocating to Nvidia, and it's not like anything was bad. We don't have any new news. So even if Nvidia does sell off, that could just mean a broadening out of our markets. So let me know what you think about this information down below in the comment section. I would love your take on this. If, Nvidia does sell off a little bit, do you think that will cause capital to go into other areas of the markets? Do you think we'll just get a market-wide sell-off? What do you think is going to happen? Let me know down below in the comment section. Hit the like button as well as subscribe to the channel if you guys want to come trade with us live in real time. Check that link out down below in the description of this video. You guys have a fantastic rest of your day, and I will see you in the next one.